All right, welcome everyone. It's Tuesday. It's July the 23rd. That's right. It's finally time for another live trading room here at the 5ers YouTube channel, where we do live trading, educational content with the sole purpose of helping you guys get through your elevation account, get funded, and keep that funded account so that you can achieve your dreams and your goals in the world of trading. How you doing, Victor?
I'm doing great. As we're starting this day, this session, I am I'm excited for the session because we have, of course, that is referring to EU, but we have clear price action. So I'm very excited. I hope everyone watching us. I hope you're exciting as well. Welcome to our show.
I thought you were going to say you're excited because we got Anastasia on, and then you're like, I'm talking about EU, but I'm very excited because we do have Anastasia in the background waiting to come on here. Last time she were on 2 weeks ago, she talked about her trading system. She broke down a trade setup, and we got a lot of positive comments on that live stream. You guys really loved her analysis, so we bring her on again, and she has promised to show and break down a couple of trade setups so that we'll get more insights and valuable knowledge in the way she is trading. So I'm going to bring her on. Welcome, Anastasia. How are you doing? And thank you for coming on here with us today.
Thank you so much for inviting me again here on the stream. I'm really, really excited. Really happy to be here today. I'm doing great. Thank you so much. How are you?
Well, I'm good. I'm good. It's been a slow trading week. I did just have a TP hitting on a trade just before going live, so feeling good, feeling positive. I guess that I shouldn't be feeling this positive with a winning trade. I guess I should be neutral. But we're all humans. I guess we do get affected by that emotion when stop loss gets hit. It's difficult not to feel a little bit negative about that, but yeah, we need to stay balanced here. But let's not talk about my emotions. Let's talk about your trading system. How have you been taking any trades since you were last on here?
Absolutely, yeah. So actually, I want to be honest with you. The past 3 weeks might have been the most difficult weeks in the whole year so far.
Wow.
Due
Okay.
to the
Yeah.
presidential elections, everything that is connected to the presidential elections, debates, everything that is happening as well as was definitely affecting the market, together with the interest rate and the monetary policy changing as well in Europe, Canada. Everyone is waiting for the effects in US to take place in the next month. So I guess it's been affecting the market, honestly. So, but nonetheless, I did have a couple of really good trading days as well. And the past couple of days were really good. So Monday and Friday as well last week. So I'm
Yeah, I guess you
excited.
get. Yeah, I mean you're gonna have periods in the year where your edge is just not playing out as profitably as maybe the rest of the year. And I know a lot of people that we get on here, a lot of professional traders, they say that about 80% of their profits are made in about 20% of the year. Would you say that that is all the same for you, that you make most of your profits in just a couple of months of the year?
Yeah, I guess so. Not maybe 2080, probably closer to 4060, something like this, but definitely less time actually brings the most results than the other way around. So I do think that this rule applies also in trading.
Yeah, because I feel like when I'm trading, it's all about waiting for that opportunity and making sure that we don't lose money while waiting for that good month. Like I think most regular retail traders, they trade a lot, and they don't realize that more trading doesn't necessarily mean more money. It's about waiting for those right opportunities to come along. And last week I took two trades. Like there was nothing going on. I think it was just very boring, and I took two trades, but two winners, and I couldn't be happier with that. Two trades, and that's all I needed for that week. And then some weeks I'm taking 10 trades and I'm losing money. So there's definitely a lesson to be learned that less trading can definitely be more profitable in the long run.
Yeah, for
So
sure. I agree with that. Also, I think it's about maximizing the good days and the good
Yeah.
trades that you have running as well, and trying to minimize the bad ones. Like knowing when to stop trading if you feel like the week isn't going too good as well. So I think it's most difficult because we tend to want to trade. I always say it's much more fun, especially if they're in the beginning, to click buttons and to be in the trade than sitting and waiting or back testing and learning. So I think it's one of the most difficult parts of it, managing this patience.
Yeah, and we're humans.
Yeah.
We want that dopamine kick. We want action. We want something to happen. Like sitting around just waiting for EU to move or whatever is not fun. It's very boring. And then you're like, well, maybe I should do some back testing. And they're like, well, maybe if I go into the 1 minute chart and I can find 10 trades today, that sounds way more appealing. I think I'm going to do that. And then you start over trading, and then boom, you lost the account. And you're like, maybe back testing wasn't such a bad idea after all.
It's
You're actually funded with the 5ers. So for those of you watching here, that Anastasiia is funded with 5ers and is trading an account right now with us. So just to make sure that you understand it, and she's here because she's actually a profitable trader, and she has a funded account with us, and have had multiple payouts as well, which is quite impressive, because most people, like, getting through evaluation is difficult, but to have multiple payouts is actually few people that manage to do that. Few people get through evaluation, but way less people actually do have consistently figured out how to get multiple payouts. Victor, I'm going to stop interrupting you. You wanted to say something.
No, I was gonna say on the subject we were discussing a few minutes ago, that it is it's easy to be in a trade, and it's easy to think that being in a trade is a good thing, but actually what we learn as we grow as traders is to identify when and where we want to participate. It's very, very important, because being a trader doesn't mean you need to be participating in the market all the time. Like you said, 2 trades in a week, and the results speak for themselves. You had good results, right? And it probably, if you that shows, that's a representation of the fact that your system is able to identify the moments that you need to be in the market and not be in the market. Just as important, there are moments not to be in the market. And at the beginning, it's very difficult to make that distinction, but that is something you grow that sense, or your system should be able to filter out the moments you need to be, and moments you just need to sit on your hands. That's sometimes more profitable than being in the market. Just sit on your hands because the market conditions are not favorable for your edge. And it's something that comes with and actually what you said later on, you said about making multiple payouts is because when you get the first payout, that you had some streak of moments where your edge was playing out in the market, right? And in order for you to maintain that account, you need to be able to not be in the market at those moments that you shouldn't be in. That's what's going to keep that account to you. And if you don't do that, you're gonna, what happens to most traders, that they will eventually lose the account because they didn't know that they were not supposed to be using that strategy in this particular, and so the market wasn't favoring them or their edge at that period, and they end up losing the account. So it's very important to make that distinction. When is it my time? When is it my moment? And I think, Anastasiia, you clearly, by having multiple payouts, that is a sign that you can distinguish when are those moments that you need to be participating and when not to participate.
Thanks a lot. Well, as every human, I guess I sometimes do have my, days when I make the wrong decision as well about trading, but that's also what, the most difficult part about managing our emotions as well. And at the right time, when you are still can when you are in the trade already, I think it's even more difficult to tell yourself, okay, I better get out now and cut potential losses that I'm having, rather than hoping about like that they're gonna reverse, and eventually extending them even further. It's we as humans, and I noticed about myself as well, and this is what I'm working on as well. It's like we tend to hope when trade is going bad, and we tend to fear when the trade is going good, that we are gonna to lose the profits that we already made. And it actually should be the opposite. We should be hopeful when the trade is going in our direction to gain even more, and we should be afraid to lose even more, when the trade is clearly going against us. And I think it's quite difficult. I guess it's the more you are paying attention to this, I think the easier it becomes, because it is kind of a habit that we train for ourselves.
Okay, Victor, I think it's...
I would even go a step further. I would say I'm not too sure if we as traders, we need to be hoping, right? Because if you have the data supporting you, then you're not hoping anymore. You know that in 20 trades, this will likely be the results of your P&L of your trading, or in 100 trades, right? We don't know the next one, but we know in a big number that what the results will be. And in that sense, we're not hoping anymore. We know with a degree of certainty what should be the result. So yeah, I think hoping is something we should be aware of, that it's probably not conducive for consistency in trading. But we're exciting for revisiting your way of approaching the market.
That's right. We got 200 people in here watching, and they're all thinking right now, yes, trading psychology is very interesting, but where's the technical analysis at? And maybe you can start bringing up your screen here. We can take a look at a few trade setups. And guys, while you're watching, make sure that you hit that like button and subscribe to the channel if you haven't done that already. And any questions that you have here for Anastasiia, put them in the comments. We'll bring them up, and we will do, if we have enough comments or questions, we'll do a sort of Q&A after these sessions. And I'm sure that me and Victor's going to have a lot of questions as well. So yeah, we'll maybe see if we can get that screen of yours up.
Absolutely. So I remember I said last time that I usually trade futures as well and analyze charts on the future. So I was thinking about actually showing the confirmation that I've got based on the futures chart. So is it all right?
Yeah, of course. Whatever you want to show, like the way you're trading is what we want to see here. Okay, so can I bring up your trading view there?
Yeah, I actually am sharing the window already. Can you already see?
I'm gonna pull it up here, and we'll see. That should work.
Let me know when we can.
Yeah, let's go. We get it all up here.
Perfect. Actually, the trades that I wanted to talk about today, they are all from Friday and Monday. So from yesterday, and one of those is from today. On oil as well, they actually were all on my 5%ers account as well. So they are all reflected there. And majority of them are on oil, and one of them is on gold. Gold is something that I do trade really rarely. So 90% of my trades are from oil and euro, and about 10% maybe gold and, for example, pounds as well. But that's approximately this. So I do really love oil. That's an oil futures chart. And this is the trade that I was taking on Friday, last Friday, before the market closure. So initially, we did have lots of information. Perhaps you heard about it as well, that oil should be going up based on the OPEC, and all of their decision about the cuts on the production as well. But usually this is something that I've noticed as well myself, that if everyone is shouting around the oil is about to hit the new highs in the next couple of months, it's first going to take a deep dive to make sure that everyone is definitely out of the market. So it's kind of a trap for those who do read the news. So essentially, I was looking for this move to the downside, and I've got my trigger on Friday. So I do trade volumes, and I do trade footprint charts. So everything about deltas, asks, bids. So for those who weren't on the first, were not here on the first stream, I've shared it a little bit as well fast. Now I want to share some confirmation that I've actually got for this one. So I was going short on oil on Friday. So here oil has been quite consolidating and broke back to the upside. So I was looking for the move that is going to confirm that the price started to go down. And when we first had this breakout, I was looking for the price to return back into two of my volume zones right here. So I've got my favorite pattern here. This is also what I shared last stream, is a kind of head and shoulders combined with volume. So we did have one volume accumulation, so consolidation here, another one. And when the price returned back to that volume zone, that was my trigger to enter this trade for short. Because first we did have the volume here. We did get the point of control, so the maximum volume at 80.80. And we got the reaction in it from two sides. So we did get the reaction here. And when the price broke through, we also did get the reaction on another side, confirming that the market was actually interested in this price level. So 80.80, it was rejected both here and here. And the volume was the extra confirmation too. So when we broke up back to the downside, this 80.80 level was exactly my entry point for the sell limit. It was a simple sell limit. Right here, and that's essentially why I did decide to take an entry. So another confirmation was the margin zone. So this is a tool that Atas platform that I'm using for my trading has. It is called the margin zone indicator, and it essentially calculates mathematically based on the margin requirements around the world where people are very likely to get the margin call. So when majority of people with certain account size get their margin calls, the price tends to react on it because lots of trades are closed approximately in the same area. So that was also one of the margin zones. It is mathematically calculated too, but this is also the indicators that is applied and does it for me. So it was one of the margin zones also, and we see that the price was perfectly rejected it. And when the price broke to the downside, this 80.80 level was exactly where not only volume was, but also where the margin zone was. So it was just perfectly aligning everything. Then my stop losses usually on oil, if I trade on 15 to 30 minute time frame, it's 40 to 45 ticks on average. So 40 to 45. Sometimes I can take smaller stop loss if I do use a smaller time frame, which I'm going to show on the next trades. But on average, it's 40-45 ticks. And accordingly to this, I did have my tick profit all the way until here. I could have taken it a little longer. I was a little bit, I cut it a little bit too short. So here I could have cut it a little longer, at least to the previous margin zone. So that's something that I could have done better here in this one. But we see that there was volume entering the market. So it was kind of playing it safe, knowing that if such majority of the volume enters the market, the price might react on it in reverse. So I did cut my profits as well here. And it
I must say, I'm sorry if I'm interrupting here, but I must say that is looks like a really good short. I think most people watching this can understand why you would want to short right there. And I really like, again, like just with the previous example you showed when you were on last time, there's such a good confluence here with the point of control and your entries. And I've also started looking a little bit about that, into that in my own analysis. So, and it's actually very helpful. And I think this is yet another example of how you have just a very, very beautiful reaction on that level.
Yeah, it was really beautiful. It was all together here. And, I cut it short also because we were coming closer to the end of the day. And usually I don't trade for such a long time as well. But it was a really nice move. I really love volume. Some people tend to overdo it. So they trade from every single volume zone or every single point of control that they have. I'm more playing it safe in a sense that I wait for the multiple volumes and confirmations align in one area. And I do wait for this very strong level to form before I actually enter the trade. So I think this is something that I do a little different than a lot of people who do use volume profile in their trading or start using volume profile. So like here we had one consolidation, another one, lots of points of controls, lots of reactions, and it's just also the reason why the price continued to react there when it came back.
Can I have a question on if it's okay with this specific setup here. So you have the range, and then you put the volume tool on that range, and you break out, and then you have the retest on the second red circle.
Yeah.
Why is that not a trade?
For a buy.
For a buy, yeah.
Because of the previous price reaction. So what we see here is that we did have the huge drop. We did have, the pullback back to the downside, but we also do have the majority of the volume here. We have the monthly dynamic level. This is also the tool that I'm using in Atas. So the volume goes like this. Then the price again drops, and this is a pretty aggressive drop as well. And the drop once again extends the previous or breaks the previous lows, meaning that it's rather for me a short preference now than for a long one.
Right.
When
yeah,
it
and
comes
I can.
Yeah. So when it comes back to that,
yeah.
Sorry.
I know.
Yeah,
go ahead. I just wanted to say that now that I zoomed out, I can clearly see the higher, the low, the lower highs and the lower lows. The market structure is definitely showing us a bearish characteristics here. So I like that you're also taking the higher time, like the overall trend into consideration. So you're trying to go with the trend, right?
Yeah, I do trade reversals sometimes as well in the end of the trade, but they are much more risky for sure than the actual trade continuation trades as always. Trend continuations are gonna, traders who could trade continuations are gonna get caught in the end of the trade, but it's rather less frequently than if you try to trade the reversals, so at least that comes out from my statistic. And another reason why I actually didn't take long here was because before this rejected also the volume. So we did have the high volume cluster, we did have the consolidation, we did have dynamic volume as well. So that was another volume zone. So they were kind of two above the price, which means that the price would need something really strong push to be able to break through this. And that was very unlikely. So here, the probability for me was on the side of the short for oil.
So basically, you have a bias based on the market structure, right? And then you look for your setup within that bias.
Yeah. So my bias is based on the market structure and based on where the volume is. So always look, in my theory, the price goes from weak volume area to big volume area. So I always look, okay, where is my big volume area? If it's right above the price, it's likely going to play a role of resistance for the price. And if I have a lot of space until the next one, for example, here, if we're going to zoom out, the next big volume was only here. So this consolidation here also. That's also why I had a take profit here. So I was like, okay, we have lots of volume above. We have a lot of space below, when the price already broke through. So all of this space I can trade while the price goes from one volume area to another.
Nice. I got a question about your margin indicator. You mentioned it to be a zone, right? Where on the chart which zone is it? Or is it more of a
delete this? No, it's a zone. It marks it up as a zone. So I'm gonna delete the ones that I just drew, and this zone, and all the way. You see 4 zones in a row. 1, 2, 3, and actually the fourth one is not reflected. Those are the automatic margin indicators. So here is a margin zone indicator.
Oh, I see.
So they draw this. 1, 4, 1, 2, 3, 4. Here is the ones. So
nice. And the
you're
one
using
that's
the Atas,
darker,
the Atas platform, right?
Yeah, it's Atas. Yeah.
Okay.
And the darker the zones are, that means more volume, I suspect. Or I
No,
mean a higher reading on the margin.
yeah, it's a higher reading on the margin. It's a higher accounts, and it's divided in from 0 to 100%. So when the trend starts, basically this is where the calculation starts from here, where the people are going to get the margin call based on their account size. 25 are the smallest accounts, then 50 are the medium accounts, the majority. Then 75 is also the medium zone, and then 100. So the 50 and 100 are usually the strongest zones. Nonetheless, I do not ignore 25 and 75. So the 50 and 100 are just where the majority of people usually get their margin call based on just the mathematical calculations.
And what is the rationale behind this indicator? Because it's something I haven't seen before, and I don't know about our viewers, but I haven't seen that before. What is the rationale behind the knowing where other traders will get margin called? Is it that you suspect that when it gets to that level, you will see an increased influx of volume? All accounts need to be liquidated, or is it something else?
So, well, when you trade futures, you get the margin requirement per one contract, basically. And every future contract, like every future ticker, basically has the margin requirement. So for oil, to hold one oil contract, you need $5,421 for now, for short. So based on this, you can mathematically calculate, where people who don't place their stop loss are going to get margin call, and when we're going to get kicked out of the market. So it's just purely based on the margin requirements from the exchange. Those are the requirements enforced by the Chicago Mercantile Exchange. And ATAS just takes this requirement and recalculates it based on the margin formula. And that's it. So the idea behind it is that if people are going to get the margin call, somewhere between the zone, there is a lot of volume that comes into the market, because every margin call is the opposite trade. So if they are selling, for example, or they are buying, for example, their trades are going to get so close on a sell on the opposite order. So there will be a big volume kick in the market, and the price is likely to react to that.
Very interesting. Very interesting. So in other words, the indicator has as input the balances of all the accounts, right?
Yeah.
In order for them to calculate the playing point or margin level.
Yeah.
I see.
Because it's only available in futures, because for the future market, because for the futures you have all the trades reflected all around the world. Every trader who is trading there, all the hedge funds, small, big, medium traders, all their trades are actually reflected on the Chicago Mercantile Exchange. So it's possible to calculate this type of, approximation where traders are likely to get their stop losses, take profits, and so on.
Very interesting. And this is this something you use occasionally as a confluence, or is this something you use all the time for your setups, for your signals?
I actually use it all the time. So I'm very rarely trading between the zones. I trade usually on the zones, but I never use it alone without the volume confirmation. So I use it in combination with volume, and that's what I found works extremely well.
I see. Very good. Very interesting.
So I've never seen it anywhere else besides ATAS, honestly. So that's also
it's very, very, very unique. I mean, this is not something that we see every day with the 5ers, because obviously we're a power firm where we're dealing mostly with the Forex industry, and it's a decentralized market where you're not going to be able to get that type of data that you can get on the centralized exchanges, like with futures. So it's a very unique edge that you're able to apply this and trade the 5ers account as well. On things like oil here.
Yeah, absolutely. It doesn't stop me from trading it on CFD, because I just use this as an analysis, and the same levels afterwards. I open my trades with 5ers, for example. So it's not the big, hassle for me. It actually makes it easier, even because I understand why the price rejects where it rejects to.
It's very
no, that's
interesting, Jonathan, for us who are, strictly non-future traders, to see
yeah.
if we can incorporate this somehow, somewhere in our trade plan or toolbox.
Yeah, exactly. I
Uh,
start thinking like, where's the correlation with the forex pairs? So I'm thinking like, yeah, you got oil, and then you have something like maybe you look at a country or currency that is affected by the price of oil, and you could definitely try to apply this
but
in forex as well when looking at the correlations.
But I think even with EU and GU,
Yeah.
since they are expressed in dollars, it's basically the same pair. So I think we could be, correct me if I'm wrong, Anastasia, but I think we could be using the same graph for the for Euro futures, right?
Yeah.
And use that information margin indicator to see significant levels or zones where we could expect some kind of rejection or volume coming into the market. So I think my interest is peaked, to say the least.
Yeah.
Yeah, I do use Euro futures as well to trade Euro USD because it's almost exactly the same chart. So this is, for example, how it works on Euro. So this was the start of the calculation, and we see when the price came to the first margin zone, it also got the rejection. Then it broke through, it got the rejection of the margin zone from another side. And just today, it got this huge week to the upside back from the margin. So it's again came back to the next margin zone already and rejected to the upside. So it's all the way in the past couple of days. We see one rejection, second one, and a third one, all from the margin zones themselves. And this is not even taking into account the volume.
Yeah,
This makes so much
for
sense.
our
I mean,
viewers, who are watching and trying to get some more edge, where's the next level, the next zone in EU below us?
So, well, it is right now. I am I've been looking for the short, honestly, for the call yesterday. So for Euro, it finally happened today. I am looking still for the continuation of the short all the way until this previous consolidation. So on the Euro USD chart, we're also going to get this consolidation. So in the middle of it, this is where I'm looking for the price to go. So if we draw this consolidation, it's going to be exactly where I'm expecting the price to reach next.
And what level is that? Let me see. And on the chart,
Yeah,
that's
see
about
it.
0860.
Wait, I'm gonna start sharing the second screen. Here we go.
Yeah.
Can you see it?
Yep.
Yeah, that's my Euro USD based also on the ADAS chart. So that's my two goals are 108,360 and 108,250. So that's what I was waiting for from Sunday, basically, and it finally happened today. It did take some of my patience, honestly.
And that's a great market structure break there on the 30 minutes as well. It kind of looked like if you really try, you could see a head and shoulders ish pattern on the bigger picture here, and that's obviously not perfect, but I like how it broke down there, and then the next level below is the one that you marked out.
I was looking for it right here as well, so this was the one.
Yeah.
So
it's very interesting. It's almost to the point that it once get repetitive, but you have a complete different approach, because, for example, you have those zones that indicate where the target is, right? Zones based on an indicator that I don't use. Jonathan, we don't use that. But we have similar targets for. It almost amazes me. I have my targets right in that area as well for the bigger picture. I mean, where price is likely to be going to. So it's very interesting how how the different, and actually that's a confluence, how different approaches come to roughly to the same conclusion or to the same direction, and roughly the area where we expect price to be at. I think that's nice to see. Very good, very good. I like. Very interesting.
Do you have any other setups you wanted to go through, perhaps?
Yeah, absolutely. So I'm gonna switch back to others for a second. Just a moment. There we go. Because I know it can be a little confusing with suitors, so I'm going to show afterwards my trading view where I also have my charts marked up. So that's yesterday's gold. That's one trade. But I actually wanted to show it because I was adding to my trade based on the footprint chart, also on the futures. So that's yesterday's one right here. I was looking for the short. Principle was very similar with oil, which is good because it's going to be rather simple. Also, we do have our margin zones here. And this is just to say how, that's why I'm using it, because that was the start of it. I'm going to extend it to make it even more clear. So again, we did have the drop from the start of the calculation, rejection in the first margin zone, another rejection, then breaks through another confirmation also from another side, then rejection on the next margin zone. And yesterday we were hovering around this margin zone 75%. And it was playing the role of resistance also for the price. I was looking for the short. I was honestly looking for the short already from Sunday, but I missed it because it's 2 hours later here in Dubai, and I just didn't stay up to open the trade in the perfect point right here. So when the price started to consolidate and give my pullback, I decided to actually take this trade. Now, my first confirmation was that we already did hit the margin zone 2 times, and the price started to go down. And it didn't just start to go down, but it was also supported by the volume. This dynamic level is dynamic volume, which shows how the volume moves in the market, so how the big majority of the liquidity moves in the market. So we see that it was at the price, and then the price started to be below it, so it moved above the price, meaning that majority of the volume liquidity was pushing the price down. Those were majority of the sell orders. So we get one rejection, another rejection, and the third rejection, I decided to take a trade. Again, because of the volume, because of the margin zone, because of the volume here as well. And if I would place just a simple market profile, I would also see, so I place it now from the highest point to the lowest point before I took a trade, right? So for this impulse to the downside. So it also will show me that I do have the points of control right here. So that's, again, why I decided to take a trade right here in combination with the previous confirmations too. So it took some time. It was consolidating here. It took some time before it finally dropped. And then I actually started to take, to add to my positions. Now, I never add to my losing positions. I did have this habit in the past. It actually never actually brought me anything positive, just brought me in trouble. So I did change it some time ago. I only add to the profitable positions which are already running. So I can move my one to the break even or slightly in profit, and then add another one which is not going to add to the overall risk of my trade. And I usually take the next positions with a smaller risk than the original first one. So let's say if I would take it on talking about CFD on the 2-0, then these ones I would take on 1-0, for example. So the next trade was based on the price went down. So again, we did have the confirmation that the price started to finally move. And we broke this consolidation in the past. So again, if I'm going to place my volume profile just over this consolidation, so as far as the price was going, just in one line, this doesn't really make a big difference. So the price did make a rejection here, and then it broke it. And when it broke it, I was like, okay, this is my trigger to add another position into my trade. And that was my another entry right here, just purely on the point of control of this previous consolidation, since we broke it and we did close below. Now, a lot of people make these mistakes, and I've noticed from people who've been learning and so forth, I've been teaching some time ago, that they take a trade too early. They say, okay, the price broke like this and I'm going to take another trade. I actually wait until the price definitely breaks the volume. So I would rather wait longer than shorter. So when the price definitely drop below it, and when I 100% am confident the volume is now above the price and the price is not just gonna, weak out and close above. So only after this, I decide to take the trade, in this case, the second trade. So I took another position, and then the price reversed, and that was already based on actually the footprint chart. So the third one was based on the footprint. I can also show this afterwards. And my overall profit was based on the margin zone. So that was my overall profit point, the 100% of the margin zone where the price reversed afterwards perfectly to itself. That was it.
I've got two questions from what you just explained. One is, you mentioned that you only add to winners, which I agree. I think is the best way to add if you're going to add. And you also said the other rule you have, you never add more risk to the trade, right? So my question would then be, what do you do so that you don't exceed the initial risk? You obviously would have to move your stop loss, right? From the first trade.
Yeah, in this case, because the second entry was really far, reasonably far, I could move this one to break even. So this one was break even when I was taking the next one. So in fact, my first trade, if it was even in profit actually, because it was at the level with a second stop loss. So the first one was completely risk-free and even a little bit in profit. And the other one was twice lower risk and with a normal stop loss. So if it would actually hit it, I would end up with the break even anyway. In the end of it.
So are you, and another follow-up question on this question, when you add the second one and you eliminate the risk on the first trade, will you be risking profits from the initial trade as well, or will you be putting it always on break even? Because now you mentioned that your stop loss was beyond break even, so more in profit. Will you be risking that profit as well? Or
I would risk it. Yeah, I would risk it.
Okay.
I mean, I know that's what I was doing before. I didn't risk the profits from the first trade, but I actually, based on the statistics, came to the conclusion that it is worth risking the profits from the first trade to maximize the overall profits if the price still continues to go in my direction. So it's based just purely on data and statistics. It did make sense for me.
I like what I'm hearing, basing your decisions on data. That's music to our ears. And the other question I had was, I see that you have the 15-minute chart on.
Yeah.
Do you use the 15-minute for your decisions, and I mean like entry decisions, or do you use another time frame for your decision making?
I use 30 minutes.
Entry.
Yeah, I use 30 minutes and then I use 5 minutes. 15 minutes is just because on the 30 minute I couldn't normally play these trades to show it on the live. So on 30 minutes it just all smashed together, kind of. But I use 30 minutes for my overall analysis of the trends to see where the volume is above or below the price. And I use it to, if I enter the trades sell limit or buy limit. And then if the trade is running, I'm already using the footprint on 5 minutes. So it looks like that. So that's how it afterwards.
Very, very interesting. So when you were showing the 15-minute and you said you wanted for price to convincingly and definitively break that level on the 15-minute, what I see is two 15-minute candles closing below that level that you're waiting to be broken, right? Is that something of a rule that you apply, or is it something different? I mean, in terms of what kind of viewer, when you say definitive broken, is there a way of viewer at home, maybe not as sophisticated as you do it, but maybe with a general rule of thumb, twice close on the 50-minute, beyond that, is that something, or am I going not in the right direction?
No, I got it. I wait for the 30-minute closure. So now it's gonna
30-minute
upload
closure. Okay.
30 minutes. So that 30-minute candle closed below already, and then the next 15-minute closure below was extra confirmation for me, and then the next rejection here on 15 I was already taken. Well, I was taking it on the footprint, but usually it's 30-minute closure below the volume. And also something that I'm waiting for the price for, like, how to say it, there be a space between the price and the volume. So for example, somewhere where I don't have so much stuff marked up. So let's say I am taking the trade. Let's say here I've got my volumes, okay? So I wouldn't be taking a trade until we are here. So I would actually wait to see a background kinda between the price and the volume. So until the candles are very close to the volume, I'm not gonna take a trade. So if I will see the empty space, like a kind of the background, if I can see the background of my chart between the volume and the price, then I know that, okay, very likely we are far enough to now consider taking a trade if the price returns there. Because
So
what volume, that's a volume trap, is that volume is, consolidation is volume accumulation. A volume is a magnet. So if the price stays very close, you can get to like a trap where the price keeps consolidating around it. So because to overcome this, I always wait until we are definitely far from it, far enough.
So basically what I understand is, if I understood correctly, that you use two components. One is the time-based, which is the close of the 30-minute beyond that level. And if you have an extra 50-minute close after that, that's extra confirmation for you. So you have a time-based criteria, and you have a distance, right? A space from current price and that level, which meaning those two give you that confidence that you can be sure, okay, we actually broke definitively that level because we have the time and the space in between.
Yeah, exactly. Yeah.
Nice. Wow, this is gold nuggets for our viewers, for everyone. Jonathan, I think I'm very excited for being able to have Anastasiia with us and showing all these. This is edge, people. This is actual edge. If you can incorporate these ideas and have your trading rules, reflect those ideas. That's why
now I know. I'm sorry for but now I understand why you keep talking when I'm talking, because I've muted my microphone for the last 15 minutes or so. And the funny thing is, I've tried to ask a lot of different questions, but you're actually asking the same questions that I'm asking. So very good questions, Victor. I wanted to just comment when we talked about the number of candles closing after the level is broken. So you're saying that when a level is broken, or when the point of control or whatever level you're looking at, that level needs to break, and then there needs to be a it needs to be a clean level, and you want that test to be the first test, and you don't want a lot of wicks testing the level before you enter, right?
Yeah, I don't want, like, I usually enter on the first retest. Because also what I noticed with volume is that the more times the price comes close to the same volume, the likely it is that the price is going to break it. Because so it's coming, like, the volume is also the orders that are still there. So the more times the price returns to the same level, the more orders it fills, and the less is there to protect this level from the price breaking through.
Yeah, and I always say that, if you have, let's say you have a level, could be a supply demand area, could be, you call it whatever you want, like a point of control of that volume area. Let's say you have that level, and you have a 100% volume, and with every test, you reduce that volume with 25%. So the fourth retest is going to be the break, which means that the first retest you have 100% volume, and you got 75% left, which means there's more power that can push price in the direction once you get that retest. I think that's a really good concept to think about when you're looking to trade a broken level. If you're able to get in on the first retest, that means that it's fresh. There's a lot of new buyers or new sellers in that area, and then of course the more it gets tested, the weaker the level becomes, and stronger on the flip side. But yeah, very very good thing to keep in mind. It doesn't really matter what system you're trading, but
exactly.
yeah.
I wanted to say that it's a general theme that I keep hearing, and I have the same thing. What you just mentioned, the word fresh, right? And that's something I talk about all the time. The freshness of an order block, and it's the same idea. The first task is different, has different stats and probabilities with the second, third, fourth, and so on. And then doesn't matter. It doesn't have to be an order block. It can be a trend line, a volume area. It's the number of attempts it has had. If it's mitigated in the case of order blocks, or it hasn't been tested yet, is of significance. And that's a general theme that we keep hearing, and that confirms that it's like that, right?
Yeah, I agree with that. Yeah, so for example, sometimes I get questions like, why do you only enter one time on the volume if their price rejects it 5 times? I mean, anyone can enter as many times as they want. I just don't, because I prefer to stay safe and enter one time from the same confirmations than, because my probability decreases with every single time the price returns there. So just this. I've also seen I was just reading the chat box. I actually do use TradingView. On TradingView, you can use all the volume. So the only things that is not available on TradingView is the margin zones. But on TradingView,
right.
Definitely there are multiple volume indicators that you can use. Super helpful as well to see it. And if someone wants to analyze futures, TradingView also does have the futures chart, right? If they want to analyze volumes on futures market specifically. To then
I'm a bit interested in the footprint charts and how, because the Forex market is obviously not decentralized, but if you go, for example, on a big exchange like Forex.com or OANDA or something like that, and you put on the footprint charts, that should give us information from OANDA, right? The exchange that you're actually looking at.
Yeah.
And wouldn't that be a good representation of the overall market, but a smaller sample size? But because it's still,
I would look, to be quite honest with you, I think that the overall exchange is more reliable, because still we have one that is just a part of the market, right? While volumes, while the futures are the majority of the market volume in general. So I don't know, to be honest with you. I see sometimes that the volume is different with Euro USD and, for example, Euro futures like 6E. And if I have a choice, I will always rely on 6E rather than Euro USD futures, for example.
Actually, I think the question for our viewers and ourselves is, how much difference do you see when you compare the volume indicator on the future and on, let's say, one price feed from one broker? Do you see a lot of, in other words, can we use a single broker to add those volume indicators as reliable as we can do that on the futures? Since you are trading both of them, you are the best person to give an idea of how equal are they.
So they are majority of the time equal. I use OANDA on TradingView to analyze my charts for CFD, So they are majority of the time equal, but I still do prefer to check it on futures, because sometimes the small difference is a crucial one in the end of the day. So I do still use always futures to just, confirm my ID about it.
I see.
right.
I've got a question on the chart that you showed us, the 50-minute chart that where you took I believe it was I think I'm not sure if it was crude crude oil, the first setup you showed us.
This one.
Yeah, that one. And remind us again, what do you use for your stop loss placement? Because I see that it is the first entry, right? Your stop loss was almost equal to that swing high, but
Yeah.
a little bit lower, it seems. um how do you remind us again, how do you decide where to put your stop loss?
So I have two components of my stop loss placement. One is a back testing. So again, it's purely data. So I just back test. I'm gonna share the Excel file for like back testing of stop loss take profit in my channel afterwards. So everyone can just go and back test based on their trading system. What is the average stop loss size that bring them the least losses and the most profits? So I do have it on oil, on euro, gold, things that I trade the most. And just out of this backtesting for oil is the most, my stop loss is 40-45 ticks. So that was just purely backtesting. Now, if I can see that there doesn't need to be such a big stop loss, for example, I took this oil trades. So that one actually kicked me out just tick to tick. But that one was a good one. That was yesterday, and those two were today. So in this case, I did not need the big stop loss, so I could use a smaller one, and then I use it based on the volume. So I enter here based on this volume right here, this consolidation. One of the reasons, and that's 5-minute time frame on certain, there were more confirmations. So if I enter based on this volume, it means that I don't want the price to break through this volume, because if the price would break through and close below this volume, it actually would be above and it would play a role of resistance. So the price would simply probably just pull back and completely go into against me. So in this case, I place my volume. If I trade on the 5 minutes and enter on the 5 minutes, I use it based on the volume, and I place it like further from the consolidation volume here. So if this is the size of consolidation, then my stop loss is going to be approximately 50% at least smaller, bigger than this consolidation. So it's right here. And that is approximately 50% of this consolidation beyond the consolidation.
So basically, you use the volume, right? The range of the volume for as a multiple of that for your stop loss.
Yeah, and then back testing also. So that just two components.
Nice. Very, very nice. So basically, you use a volume for your entry, for your setup, also for your stop loss.
Yeah, also for my stop loss and also for my take profit. So again, if my take profit here was based on this volume. So again, I've had this volume here, accumulation. Adas is showing it clearly. So if I place volume profile over this whole mess that was going on oil on 19th, then point of control of it is going to be exactly here. So this is thanks to this, the take profit here was just perfect today. So
nice.
That's based on volume and entry and stop loss and take profit in this one.
Yeah, it makes a lot of sense, indeed. If I relate this to how I trade, I use the order block for the entries, also for the TP. Right, where I'm going to put my TP is on the opposite structure, in the same lens that I see the market through, which is the order block. So, and you're doing the same by using volume not only for your entry, and your stop loss, but also for your next TP. Thinking the rationale is being it goes from one structure, or in this case volume accumulation, to the next one.
Yeah, absolutely. So it is just logically, because if I enter from it, I don't want the price to go below it, because it's going to invalidate completely my whole idea. So holding it too long, hoping that it's going to reverse, it's not going to make it. So that's why I place a smaller one, because 40 ticks in this case also would completely mess up my risk reward.
Yeah. That is makes total sense. Man, wow, great information.
Yeah, this is really good stuff right here, and you can find the link to Anastasia's Telegram channel in the description of this live stream. Make sure you go there and join the channel. I'm in there myself, and I'm reading all the updates and the really good stuff in there. So make sure that you go in and check it out for yourself. So we're coming up to 1 hour here. Is there anything anything else you feel you want to show us and talk about here before we start wrapping this up?
I know I can talk for another 2 hours, so maybe if someone has any questions.
So I think what we should be doing is we should probably bring you on another time and do some live tradings. And now we've talked about the system, and then we can see if we can actually do some live analysis of the current market, and then you can perhaps join us for a live trading session where we try to actually get a trade in live here on the live stream. So let us know in the comment if there's something you guys would like to see. And again, make sure that you do check out the link to her Telegram channel. And I've also put your Instagram channel in there as well. So make sure that you go in and give her a follow.
Thanks a lot, Jonathan.
So, Anastasiia, I would like to thank you a lot for joining us here today. And we're gonna try to get you on in the short-term future, definitely, because we have I'm going through the comments here, and people are really enjoying your analysis here, and it seems like they're getting a lot of ideas to start testing on their own.
Thank you so much for having me here today as well. Thank you, Victor. Thank you, Jonathan. I really appreciate it a lot.
Thank you a lot. And guys, we're gonna take a quick 10-minute break, and then we're gonna be back, me and Victor, and I don't know what are we gonna do, Victor? Do some live trading, probably see if we can do some live trading.
Sure.
All right.
Sure.
Let's do that. All right, guys, take care, and we'll see you guys in 10 minutes. Oh, there we go.
Yes, we're back.
Well, like where's my face? But I forgot to put on the camera. We are back. Okay, very good. Still trying to process the all the information, all the new information, footprint charts, got the volume, but actually, it's quite simple stuff. It's just, well, it's advanced, but she's making very easy to understand. I must say, like she explains
Yes.
it in a very very good way.
Yes, indeed. I think the indicator, if you're not familiar with them, they may look sophisticated, and perhaps they are, but she brings it as something she uses them as the same way we use supply and demand, order blocks, and so it's basically something very familiar to us, right? The way she does it, and she does a great job in explaining it in a very digestible, easy way for everyone to understand. So I always enjoy when she is on with us. I think she brings a lot of values for our viewer. Indeed.
Definitely. Okay, so I got trading view up here, and the goal here is I'm gonna see if I can get in on a trade here. I'm on logged into my bootcamp account right now. I am let's see what's my drawdown. I'm like, think I'm at like a 1/4% in drawdown, so right below break even on the bootcamp account. And I'm thinking I want to quickly go through the market here to see if I can get in on a trade on a lower time frames, because we are seeing some decent some decent movements right here. And I'm actually thinking that I want to go to EU, because we saw that move to the downside on EU. And I'm now thinking, am I too late on this move, or can I join the move to the downside? And while I do think that I'm too late to join the very, like, this move right here, I think if we can get a push up to that level, I definitely have a short opportunity on the lower time frames. That retest of, let's say, this level right here. So that's something I want to see if we can get an entry on during this live stream. Of course, we're going to see if we make sure we don't have any news event coming up right here. So we're going to go over to first. I'm going to check a site called Financial Juice, see, just to get a overview of what's going on. We don't have any major happenings right at this very moment, and we also do not have any news event today. We do have an orange folder event coming up in about 40 minutes, but that's we don't care about that. I don't care about that. You guys should probably care about that, but today I'm not caring about that. We have Fernando saying GU. Take a look at GU. Are we seeing well, okay. This is different.
I think
So
GU, in contrast to EU, I do think EU's move, well, depending on your type of kind of the type of trader you are, EU probably has already left. The move has already started. So unless you are a very high time frame trader, you probably will not be able to catch get an entry and still have a stop loss that is adequate. But GU does offer, still hasn't had that impulsive move to the downside, and the market structure isn't much different, even though it is lagging in terms of that impulsive move, lagging to EU. EU has already started. Maybe GU still can offer opportunities to get in at a good level. And maybe we can analyze EU and, well, one of them too, but especially EU for those who still want to be entering that trade. We can analyze them and give them a couple of things they can consider if they want to enter, even though, in my opinion, it's already that ship already sailed away. But we can I can offer we can offer a couple of things to consider when and if you do decide to enter EU still. We can do that in a couple of minutes. But you were going to look at GU.
Yeah. So GU right here. Now I got the indicator on here, so I got the moving averages and the weekly open on right here, and this is something I really like to do on a Tuesday. I'd like to well, actually throughout the whole week, but on Tuesday it's fresh, and so it's the weekly open. I like trading a reaction to the weekly open on Tuesdays. That's now again, you guys show me, or I showed you guys my trading system yesterday. Obviously, I'm not using the weekly open moving averages in my overall long-term swing trading approach. But when I'm here on the lower time frames, the way I'm trading here is I'm using different indicators just to spice it up here for you guys and make it interesting, because otherwise we would just be looking at nothing, just a naked shot, just waiting for the 4 hour to do something, which would be just 2 hours of me not doing anything. So to make it a little bit interesting, if we look at GU from this perspective, and then we're also going to be adding the fibs here, what do we see here? Well, I would say that we're seeing the perfect confluence. Okay, we got the retest of the reload zone right here, and we have a bearish engulfing candle breaking below this level. The way I would trade this is to put in, and you also see that we tested the weekly open. We did test the 50 EMA here on the 50-minute, the cloud also between the area between the 20 and 50. And if we add a stochastic RSI, you're also going to get a bear cross right here on the close of that bearish engulfing candle. So what I would do in this case is I would place my orders somewhere around this area, stop loss probably above the reload zone, and then I would TP at front running the low right here. And now because we have a 1.75 R risk to reward, we can increase the stop loss all the way up to that level, so we have a 1-to-1 risk to reward ratio. So given the fact that I would have placed orders for that trade, what's stopping me from entering the trade right here? Well, what's stopping me is that most of my good trades, most of the trades that I look at in hindsight and say, "Oh, that's a perfect trade," has an immediate reaction. It hits the entry area, and then it just starts moving in the right direction. It has an immediate reaction. The reason why I want to have a wide stop loss is in case I don't have that immediate reaction, and I can perhaps exit the trade here if we have a move like this. So now the probability of this trade is not looking as good. And because we can also view it now from a different perspective as well. We can view it as a bullish reclaim of this level right here. We can now look at this as a low, a high, higher low, higher high, higher low, and an uptrend. So the probability is that the probabilities of the setup is of course changing with price action, and now it's telling me that it's way more riskier to enter here, even though the risk to reward would be much higher. So how would we trade GU? I just got an alert on EU as well, so we're going to be looking at that shortly. But how would we be trading GU? Well, I would actually look at GU and say that this is a potential long. Okay, so for different reasons, I think we hit range lows. We are having a bullish reaction at a low time frame support, and if you look at the 50-minute, we have a nice bullish candle right here on that support level. So if I had to choose one direction right now, looking at the move down, well, the overall picture is telling me that GU is bullish on the daily. On the 4 hour, it has broke structures. I would say that 4 hour combination with the daily, I'm neutral. Daily, 1 hour kind of neutral, but it's only on the low time frames where I see a market structure shift. So yeah, it's really difficult to it's really difficult. I think I'm gonna be looking at EU here. See,
maybe before you go to EU, go to EU, I can offer my take on GU, and then the viewers can or we can discuss this together. And then before we go to the next pair, let me show my my chart on GU. So on GU, what I see is, do I have that? yeah, what we do have is we did form a bearish order block on the daily. So that is that in itself is an opportunity in my case for price to get into that order block as it moves out of it. It hasn't happened yet, so I don't have a daily signal to go short on GU, sorry. And on what I do have is on the 4-hour H4 order block time frame. We do have an order block that was formed yesterday, and we typically what we do have after a order block, that's something I talk about all the time. The order block is formed within this candle, and after that it goes to retest this the newly formed or freshly formed order block as it moves out, right? That has happened, and the opportunity for a short I see is that in this time frame it has already had its move down, right? It has already made that move away from that order block. However, price doesn't go in a straight line. So as even if it closed outside, it can still come back to a certain degree and but revisit this area as it is keep on going down. So, and that gives us the chance of a opportunity, because I think this H4 order block isn't done yet. I would think. I don't know, of course, but I would think, since it has only one candle that moved out of that order block. So what I'm expecting is, or what a setup is, a short. I don't see, I don't have enough to go long here. But what I would do is, if I go to the H2, I find another fresh order block that is within that H4 order block. And that to me is an area of interest. It never got to this H1 within the trading time that I trade. This happened during Asia. That's why I didn't take that trade. But it's compatible with the idea that we have shifted again, right? We had an impulsive move from that after we formed that daily H1. We had some consolidation, and we now, especially with these two bigger, and this last one, this bigger candle, we have shifted back into probably a impulsive move to the downside. At least that's my read on it. And if that is the case, then the best place to be selling this would be a supply zone above, right? And one that is in relation to that H4. So what I would be looking for is a short from that area as it is moving out. And we haven't, this low of today, we haven't reached the ATR on the daily yet. So there's still about the ATR for GU is roughly about 871. So I would say that could be a great trade if it happens, right? Something around here would be the ATR. Not necessarily that we need to target that as our TP, but if we can catch, if price comes back into this area, and we can see on the lower time frames a transition back, right? Because this is a impulsive move, a bearish impulsive move, right? This bar. But if we go to the lower time frames, what you will see is that this is that impulsive bearish move. But now we are on the 5-minute, in any case, we are in a bullish market structure again, right? Making higher highs and higher lows. So we need to shift back on the lower time frames to bearish. And if that happens within this area, right, it has already interacted with it, but it hasn't broken any structure yet. The structure will be here. If we are able to get in and start breaking, shifting back to the downside, that would be, to me, the area where we could be selling this area, this level, which is around, what is this, 229, starting 229.18 all the way to 229.28, so about 10 pips of a range. If it rejects this and showing us some kind of a rejection order stick or a pattern, then we could be targeting either this low, right, for the first TP. That would be one, or maybe I should use another one, that TP, or something closer to that daily ATR. If we think it's going to 100, then it makes sense to have a TP a little bit lower. How much lower? It depends on the time of the day that it breaks the first one. If it is breaking the first one at the end of the London session, it may not have a good chance of reaching the second one, right? But if it goes very quickly and breaks this one, then having this the second TP a little lower makes more sense. So I don't see any buy necessarily in the way I look at the market, but there is a possible short here. So that's my take on GU.
I'm just going to show you guys I'm in a EU trade here. So this is the short on EU. I've just entered that one. So the idea here was basically as soon as I saw a reaction to this level right here, I decided to get in, and my TP is on the daily 20 EMA. So if I go, this is the daily, got the 20. If I put that on, you'll see that that is the daily 20 EMA right here. I think there is a somewhat of a lag. Let's see if I can switch this. I want to have that as two line with breaks. I think that's it. There is, I think there is a small okay,
lag?
it's not supposed to be. Yeah, there's a small lag here. If I go to the daily, you see, no, actually it is down here. So what I like is I'm front running. So that's the daily 20 right here. And then you get the high of that wick. So I'm kind of front running that area. So if you go back to the 5 minute, you'll see that the daily EMA comes up here. So basically we're looking at this downtrend I'm looking at is this right here. And then we have something like this. Now I'm expecting, or not expecting, but it's likely the price might come up and test this region again, but I'm expecting this trend. I keep using the word expecting, but I'm not expecting anything. But I'm just looking at this and I'm thinking, what's the probability of EU moving down? While looking at the local structure and the fact that the daily 20 EMA is untested below a confluent with a major support level, there is obviously some edge in seeing this move to the downside. Before we move on, I do have a question here. What's your view on USD JPY? And I was actually just recently looking at USD JPY because I do have an idea on that one. So I might just quickly go over to that one. You see that in here I have 5 pairs that are priority, and USD JPY is one of them. Now the problem with USD JPY is the fact that we're a bit too low here. Let me just adjust this zone a bit. But price have recently broken this level. I need to adjust it a little bit. Recent candle closes here. Now, what I need to see here to go long in USD JPY, I do think that if we get this, if this pattern plays out, then we have a likely trade. So a double bottom on the 4 hour, and then we want to see a move above, and then I place my orders here for a move up to this level. So to me, the trade I'm looking at is something along these lines. That's the trade I'm looking at. If you look at the higher time frames, it's obviously quite bullish. It's very bullish. The high time frames are very bullish. So I put along this. Okay, we get a alert on ADUSD as well. So let's take a look at that one. Yeah. So the alert that just went off on ADUSD is basically telling me that for me, this is no trade. I mean, we're coming down into a support level where we've just been testing this level over and over and over again. Obviously, this is not something I want to go long. I mean, yes, it might bounce here. There's obviously a chance that it will, but I mean, it's like 1, 2, let's say 3, perhaps 4. It's the 4th or 5th retest of this level on the daily. That's nothing I'm looking to go long. But yeah, USD JPY definitely one of the pairs that I have on my list for a possible trade this week.
The dollar yen, the reason you're looking for a long is based on the fact that it's getting back into the demand area on the daily, or is it more on the H4?
It's based on the daily. So when
Okay.
we look at USD/JPY from a daily perspective, we're at daily support. So I
Yes.
believe we're in a daily support area, but I still
Yes.
want to have a double bottom on the 4-hour.
Yeah.
I need to see a double bottom on the 4-hour to really tell me that, and then we need price to start moving a little bit higher. So I need to make sure that we have confirmation that this is high time frame support. If we go to the weekly, then it doesn't really look that great. I mean, if I get my confirmation, then it would also mean that probably this weekly candle will close bullishly, or perhaps even, or with a wick, something that tells us that this is support.
I see on dollar yen as well. We are indeed on a in a demand area, and on the weekly, let me perhaps switch screen so people can see what I'm talking about. If we look at the weekly, we are back into a order block, a bullish order block, and that is how I see price, right through the lens of order blocks. And to me, this is a demand area. And not only we are in a weekly demand area, so on a higher time frame, this would be a great area to be looking for some longs, but we are also on the daily time frames, and we have that alignment right there from the D1 and the weekly, telling us that this is a great area to be looking for a long, for a swing long. So that is very interesting to me in itself. There's no quasi in here, no valid quasi, at least not for me. So it's only based on the order blocks, on the fact of the order blocks. And what I would like to see for me to get interested, well, I'm already interested, but for me to get a trade is I would like to see on the H4, right? Same thing as Jonathan just said. He would like to see a market shift, I think you mentioned, or a price going a little bit higher. And to me, I need to see a reversal in here after the market, after price touched it. It has already interacted with this D1 order block, right? There are actually two touches, but so I need to see in the next time frame, going from the weekly, daily to the 4-hour. I need to see a reversal pattern on the H4. I don't see that yet, but we could be seeing that. To me, the structural line on let me get this out of the way. I'm always have
Let me.
some
Sorry about that, but I just want to show you guys here. I wanted to bring up MetaTrader here just for the TP getting hit, and it's like it starts reversing right just a couple of pips above my TP. So this is on the 1 minute right here, and you see they got that TP right down here. So I'm gonna stay. I'm gonna stay in this because I do see that it still has. I mean, of course, if this 1 minute candle is like extreme. If it's going to close like a massive bullish candle, maybe closing all the way above the 20 EMA here, then I think it's better for me to close the trade, because that tells us that it's obviously a huge move. But yeah, so you guys see that I'm well in profit on this one. I think I'm going to keep it open. I'm going to stay patient here. What I'm going to do is I'm going to move my stop loss down. So you see up here, I got the stop loss up here. So what I'll be doing is I'll move it just down here, because then it would be slightly above break even if I get right. So I'll be losing $57 on that one right there if we have a strong move to the upside. All right, sorry,
nice,
Victor.
very
Just wanted
nice.
to show the
No,
manager live.
of course, we have to be looking at where the action is, and if the action is on the TP being hit, then by all means we shift. Let's shift the focus for that to live trading is it's only a moment in time, so we need to capture it. Very good. What I was saying was that we do have the weekly, the daily bullish, right? In identifying this area as a great area, we can see the weekly order block here because I put it not to be visible on the 4-hour. but it is the daily order block is within the weekly, right? And if we identify this area to be a great area to be buying, but I need to see the reversal. I need to see the market shift, right? The transition from bearish order flow to bullish order flow, and we haven't seen that yet, at least not completely. We're still making lower highs, and we don't know yet if this will be broken or not. So we'll have to see and wait for that shift to change, or that shift to come to price action. Where I have my area right now, or my neckline is in for the H4. It is right here. So as the market is coming to an area of interest, I start zooming in and start following price more closely, right? So I'm going to be looking for that H4 to break this before I go to the lower time frame. This is everything I need. I don't look at the H2, H1 at this moment, because the H4 hasn't shifted yet, right? If the H4 hasn't shifted, I've got no business going to the lower time frames. I'm only going to be getting in on lesser, inferior quality transitions. The H4 has to transition before we can go up, and it's if it hasn't happened, then there's nothing for me to do. So just wait. And this comes back to what we referred to at the beginning of our stream, that for a trader, you need to know when to act and when not to act. It's very, very important, because it's maybe even more important knowing when not to act, right? The knowing how to avoid harm may be even more important than how to make profit. So this is everything I need, and this is I don't go to lower time frames until it breaks this neckline, or it forms another one, a lower one. So I do keep checking it every so often if I would be trading this pair, until it either it does two things: either it makes the transition right on the H4 to go long again, or it closes on the daily below that area. Because since this is a daily order block, if it closes below that area on the D1, it invalidates this order block and invalidates the whole setup, right? And that's what I think on dollar yen is relevant for us right now.
Yep.
And on EU, there is something I think is relevant for traders. If I would look at this, very interesting. I do like this a lot. On the weekly, right? Without going to a detailed breakdown of the market on the weekly and the top-down analysis, we have touched last week the entry order block on the weekly time frame, so that I would expect a reaction, right? And this pin bar fits with that expectation, right? We have that pin bar, which is a sign of rejection after it interacts with that order block. So far, so good. After we don't have a signal yet on the weekly, but if we go to the daily, right, after we touch that, this is the weekly, right? This shaded area here. Let me get, if I can mark it. That's the shaded area. After we touched it, right here, right, we had a bearish engulfing, forming a bearish daily order block, which offered us opportunity, or would offer us opportunity. I did not get the signal I was looking, but after, it's the same thing over and over again, right? It forms the order block with this move and then goes back, testing it before it continues. That's the basic, very simple general idea of how to trade order blocks, right? It comes back into that order block, tests it, and moves away. Sometimes it goes deeper into it, and sometimes it only needs a little wick, a couple of pips. This is about 3 pips, until it continues its way down, as you would expect. And we did get that. However, I did not get the signal that I was looking for when within or after it touched that order block. So I didn't get that entry signal. I left these order blocks here, even though they are already invalidated, to show you guys that we are breaking bullish structures, right? And if we're breaking bullish structures, obviously that's a bearish sign. So the market has the same with GU, right? After this impulsive move, we had some consolidation, and now we have switched back. And we talked about this on Discord yesterday. We're expecting price to probably transition back into that bearish order flow to continue its way, probably to some other structure of relevance, which would be the daily order block, which sits below us. And Anastasiia was mentioning she had a volume. Her volume indicators were telling her.
Sorry for
around.
interrupting you here, Victor, but I just wanted to show you guys that I've exited the short here, so you can see now on the 1 minute that we have a clear, a break of structure. So when breaking that trend line to the upside, with that candle closing, it looked like price wanted to continue higher. Looking at the 5 minute, there is still a chance to go short, and even when we're looking at this, I might want to look at that move and then to go short somewhere up in this region right here if we had hit that area. But yeah, quick profit on that one, $100 on EU. Then this morning closed,
Nice.
or right before starting the stream, closed UPCHF for 350. So 2 trades today, 2 winners. I am, however, still slightly below break even. So the bootcamp journey is it's like I went up in a good profit, then I had a couple of losers, and I'm like hovering around the break even. But I think that's because I don't know, like a slow start, but hopefully I'll be able to pass this evaluation during the during one of the sessions. All right,
I think
back to you.
I think you're doing great. Sideways movement on your equity curve is very, very, very normal.
Yeah,
So,
definitely.
and I think that's you're showing how trading, in the real world goes, right?
Yeah.
It's not winning after winning after winning, but you do have drawdowns, you have sideways movement, you have places where you do, 2 steps ahead and maybe 3 back, and you keep hovering on certain level.
Yeah, and
It happens.
actually, I only have one loser on this account. So you can go, we can check the actual history here of the bootcamp account, where you see that. Well, actually, I have two losers, but you see that the losers, this one for 800, I think something happened here, because it's not supposed to be to be that big. It's supposed to be like 600, something like that. So I made a mistake with the stop loss on that one, but without that, you could have seen that I would have been in profit. So right now we have 1, 2, 3, 4, 5, 6, 6 trades, 2 losers, but still, because of the fact that I'm sometimes looking at negative risk to reward ratio, I need a big number of trades to actually start putting me in profit. And yeah, so now I closed the trade, and yes, I missed a good move right here, because I actually did have my TP right here. So one would say that maybe you should have been patient, and yes, of course, in this case I would have been patient, but sometimes I also like to get out of the trade if the structure is broken. And now when I look at this, at least on the 1 minute, we have a different structure here. Now what we're seeing is if we start to bounce here and we start to move higher, maybe I'm not going to be looking for long for shorts on the lower time frames. Maybe I'll start looking for longs if we can break structure. But I am looking at one area, and that is, like I said, this level right here for a move up to this level, and then I would take it below here. So basically, it's this resistance I'm looking to short if we can test that that area.
Nice, nice, very nice.
Are you well, maybe you weren't done with your analysis on EU though.
No, I wasn't, but that's okay. So what I was saying was that we have the expected price action after the formation of that daily order block, and if we're leaving, right, it's the same idea, that you know it's actually very simple, right? Trading can be hard, but in a way it's simple. The idea is not very complicated. The idea is we're going from one station to the other station. We're going from one bearish order block on the one time frame to probably going to the next one in opposing direction, so a bullish order block on the same time frame, right? Doesn't happen all the time. Sometimes it reverses before getting there, but usually you see this reoccurring theme over and over and over again, where we leave one station, we go to the next one, right? So that's how I form my biases based on the higher time frames. What station have we just left? That will give me my best idea, where are we going to, what's direction should we expect. So we already had on the Discord, we expected price to be, we discussed this, we expected price to be going to be rejecting somewhere and switching back to that bearish order flow. And if I go to the lower time frames, we did have a price did come into that order block for the setup to be activated, but it happened during Asia, so that's not a valid that I wouldn't be looking for an entry back then. So there wasn't any signals, not according to the strict trade plan that I have. Doesn't mean that I cannot take extra trades, which I consider then discretionary, and they would be also in the same direction more often than not, using the same structures and bias, but just not fitting, just using something different. Right? One of the things that I'm in a trade right now. One of the things that I used is I would use the same idea, right, where the order block is. I will show the trade in a couple of minutes. What I would use is the same idea that I showed on the daily, right, where price forms the order block, goes back to retest it, and moves away. That's the same idea, but in another time frame, right? But in the same direction as the higher time frame. So what you would see is, let me see, you have this order block on the 30-minute order block, right? And it does exactly the same move. Very simple, as I said, very simple. I don't have the 30 minutes because I didn't use that very often, but I'll use the 15 minutes. It's not a 15 minutes, so maybe I should just change this to 30 just for correctness, right? 30 minutes. What does it do after forming that order block? It goes back, retests that, and moves away. And when it does that, typically I would want to enter in the lower time frames at, let's say, at this level or somewhere after it formed that rejection. But that is a great idea where you can use for that impulsive move to the downside, right, in the same direction as we're already going. The only thing that I would say is we are currently on EU at 51 on the ATR. The range of today is 51, while the ATR is hovering around 41, 45. So we are basically a little bit over 100% the ATR, which we know that from this moment we need to be watchful, right? Because it tends to the further away you go, the more you exceed 100% ATR, the more difficult it gets to keep on going further. So that's something to consider. If you are in a long and you just got in, right, it's probably not going to run much well, at least the probabilities are not in your favor for it continue to going, keep on going. At least not today, right? It probably gonna hover. It may continue, but in order for it to continue, it needs something extra, like a news, high impact news, or some catalyst coming in. And I don't see that happening. We don't have a high impact news coming up, or it didn't happen today. So for me, there's not a lot of reason to expect price might just continue to go down to our target for today, right? The target being at roughly somewhere related to those structures below. So what will happen is probably price would at some point, right, either here or a bit lower, start to transition back and start consolidating for this day, and perhaps tomorrow we could continue, or even later, before we get to that daily, right? Because price doesn't move in a straight line, right? Sometimes, but usually it doesn't, right? It needs impulsive moves, and then does some kind of consolidation as it moves to the target. So to expect it reaching it today would be, let's see that in terms of the ATR, that should give us an idea of how likely it is to hit today. That's actually, to be honest, 71 on a longer 71 is not that and that's not crazy at all to be hit today. If you look at historically, 71 is the ATR is around 70 a lot of the time, but currently for the last couple of session, it hasn't been having that kind of a range. So in that sense, it is not so likely to be hitting it today, but it is not very uncommon to have a range of 71 any given day on EU. So those are the considerations I have, and I do have a couple of trades that I put on. The trades are not, as I said, are not my typical entry, but are based on the fact I used the 30-minute order block to enter, and it was when price came back, and then rejected that move. To me, that was the sign that I'm trading this 30-minute order block, and I'm going for I'm going with the trend for lower prices, right? How much low? My current TP stands at roughly this area, but I have the same considerations, or I have those considerations that I just mentioned, that price, depending on what the time of the day is, may or may not have the opportunity to reach that target today. And since this is a more discretionary trade, I want to be extra cautious with that trade.
Yeah, I'm in a long on GBP CHF on the same account, not looking very good for that trade. So I'm waiting for, so you can look at the replay. I was based on this movement, but then we had a break lower, and then it started consolidating on the lower time frames. And now I'm looking to, I'm simply looking for an exit. So I'm trying to get out of this trade where it's going to cover the commissions, and I believe the commissions for this trade would be, what would it be, like 10, 20, yeah, 20, like $20 or something like that as commission. Okay, I'm gonna get out of that one right now, because now it's breaking down. So you can see here where we have, that was my entry, and then we started consolidating here, and then we broke down. So the structure was basically based on bounce on the 0.618, and then another bounce on the 0.618, and we have that trend line, and now it broke below the trend line, and it's better to get out of that trade. So as you can see, trading much differently when on this bootcamp account, and yeah, I'm trying to see if this would be profitable. Because what's interesting here is when I have an elevation account like this one, like it's not very expensive. So I don't really care about it. I don't really put a lot of emotions into this. I'm just gonna, whatever trade I'm taking, like I'm just trying this. Like if I lose the account, I lose the account. If I pass it, I pass it. And that's positive. But it's actually, I think it's a good way to manage the trading on my bigger personal account, or my bigger funded account, because if I can focus on taking the maybe less than perfect trades but still interesting trades on an account that I'm not funded with, that helps me stay patient on the other account, basically.
Yeah, let me show. I'm considering taking profits, closing the account. I would have closed it already, but I wanted to show the trade live, so I didn't close it, and I hope I did not miss the because this is not the I don't have strict rules for taking the trade here, since this is not the trade. My main strategies where I have strict rules where to I get out, what constitute a reason for me to get out. But we currently have at let me see, at this is, we have a pivot at 45.3, right? And 45.3, which is right below that area, one pip below. And so when we come into those areas, what you don't want to see is price reacting to them, right? And we did have this reaction, which I don't like it to have when we reach a significant area, right? Like a pivot. But you want to see it stopping there, perhaps decelerating, but then breaking it with force. And that's not something it has done. And I would have, the fact that it started doing smaller candles and then quickly made one big candle and another one in the 1 minute, that's a very early sign, but still a sign that maybe we're going to bounce from here for a little while, and I don't want to be in that trade in that case. So I didn't close it because I wanted to show the trade live as I close it. And now I'm missed basically that area. So if it comes back into that area, I'm probably would like to see it closed, or I would probably want to close it. And if already this is, to me, is not something I would like to see, right? Because we are at the end of well, not at the end. We still have about 2 hours to go with the London session, and I try to time my exits to be at the end of London session if I don't have a daily signals. And we do have a daily, but this entry isn't based on that daily order block, so I cannot use that daily signal or bias for holding that through the night all the way. So I need to be strategic with everything we do. I mean, in terms of if it is based, you have to know when to use the higher time frames. This isn't the moment for me to do it because my stop loss is way too close by. This can easily take me out if I leave it overnight and still continue to go into my my TP, right? So you have to recognize where does your entry or your setup fits into, right? What is it that you're trading? And right now I think I'm just going to close it, since we are, as I mentioned, beyond the ATR. So that's already something to be cautious about. We have bounced on this pivot. It's a little bit. I was in a relatively good profit for that little position. I'll leave it a little longer, and then I'll decide what to do.
Yeah. No, I'm with you. I think if I mean, I would close it. I would definitely close it. I think yeah, but it doesn't matter. All right, so we're at 2 hours right now, and we We're going to start wrapping this up here. So I would like to thank you all for joining today, and make sure that you go into the description of the video, follow Anastasiia as well, give her a follow on Instagram, and go into her Telegram channel. She shares a lot of her analysis on there as well. And then tomorrow we're going to be doing some regular live trading here. Me and Victor, we're going to be analyzing the markets and just do a regular chill trading session where we're going to be looking to see if we can find any interesting trade ideas to take here live for you guys. All right, that's
Sure.
it. All right, Victor.
All
See you
right.
tomorrow.
See you tomorrow, everyone. Bye.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers.